Thank you, sir, for being with us today. It's a pleasure having you today.
Good evening, sure.
For oil markets, we were focusing during the last period on the US economy against the Chinese economy. Today, it seems that Powell and the dollar are playing a very important role. What are the main things that the trader should take into consideration from now until the next 2 or 3 months?
So, if you look at the global oil markets today, uh, the demand is likely to be different in different parts of the world. It's like there are almost two different parts in the oil market. One part which is likely to show a good growth, and then another part which is likely to have a slow growth. So in this case, what is happening right now is that in Asia, led by China and then by India, we are likely to see a strong growth in oil demand. China, especially because they are reopening after 2 or 3 years, so the demand growth is expected to be very strong, and there will be a sharp rebound in demand there. On the other hand, Europe and United States are likely to see slowing demand growth, or the demand might be staying at the same levels of last year, especially when we go to the second part of the year. So in the second part of the year, I think it will be more demand picture will be more divergent, with Asia strong and US and Europe weak. So next 3 months, what we could be seeing is that oil could be trading range bound due to the different dynamics that's playing out. As regards demand led by Asia, we could be for average demand this year could rise from last year by about 1.5 million barrels per day, whereas the supply also could be rising by 1.6 million barrels per day. But this picture will be more stark in the second half of the year when the Chinese growth picks up, and when the Indian demand also will be likely strong at that point of time. Uh, so again, what is the reason for the divergence? It's the monetary policy. In the US, we have seen that Jerome Powell will be staying at a higher interest rate for a longer period of time. So the US interest rates now the market suggests that they'll be rising to about 5.6%. That's what the interest rate markets are projecting. In Europe also, the European Central Bank will be increasing the interest rate to 4%, which will be the highest in the decades. So what this could do to the markets is that uh, consumption, the economy could be slowing
Um,
down.
um, I just would like, you mentioned so many topics. You are saying that the demand will be higher in China, India, and the emerging markets. Aren't you afraid that if we see a strength for the US dollar and a negative impact on these economies, maybe the picture will be different in the second half, not only for China, but also for India?
There will be some demand impact for sure. If the US and Europe slows down in the second half of the year, there'll certainly be an impact. Because as we know, US is the largest economy in the world. Europe also has a very large economy, and China exports a lot to these major economies. India also has some strong linkages with these economies. So there will be an impact. But in the case of China and India, especially in the case of China, China has reopened after a long period of time. So there's a lot of pent up demand. Chinese savings also are at a very high level when compared to previous years, primarily because consumption growth was limited inside China during 2021-22 during due to the sustained lockdowns. So what we could see already, vehicle activity, mobility activity data suggests that it is above the near the pre-pandemic levels. India also had a for a long period of time it was below trend growth. Primarily, like in 2021, there was a second wave of COVID which disrupted the economy for a long period of time. The economy is in a rebound, in the process of rebounding. So we expect Chinese and Indian demand to hold up better, or we expect them to be on the stronger side when compared to last year. Whereas Europe and US could be slowing. There will be some impact, but the net result could be that global oil demand will be higher than last year. Maybe it could become near the pre-pandemic levels also.
Thank you very much, Mr. Arun John, for being with us today. It was a pleasure having you.
Thank you very much.